Bloomberg Audio Studios. Podcasts, radio, news.
Shares of HPE are plunging today after the company said profits in the coming year would be hurt by tariffs, weak margins on server sales, and execution issues. HPE also saying it will look to eliminate 3,000 jobs. Antonio Neri, HPE CEO, joins us now for more. Antonio, I know it's a tough day, but give us a little bit of clarity in terms of what you're seeing as the turnaround plan here.
Yes, good morning, and thanks for having me today. Obviously, it's a disappointing day for me and for us as a company. We had a solid quarter. We delivered on our commitments. We grow our revenue double digits, up 17%. We had double-digit growth in our bookings, but we disappointed on one specific metric, which was the server operating margins. And that server operating margin was impacted by three specific issues. Two in the traditional server business, call it the x86. One was a very aggressive market, meaning high discounting. And second was a specific issue with the evaluation of our inventory, which caused us not to have the exact right cost in our pricing in the end of the quarter. And those issues have been already fixed, and we have taken very aggressive action. On the AI side, we have a higher than normal inventory related to the GPU transition from the Hopper or H100s and 200s into Blackwell. And in the quarter, we booked $1.6 billion of new AI system orders, which was double the orders that we had in Q4, but 70% of that is on the Blackwell side. So the working capital aspect of that had a negative impact on our operating margins for the servers. The rest of the business was very, very strong, and inclusive of the networking business, which had, again, another recovery on sequential revenue, double-digit year-over-year revenue growth. Our hybrid cloud was up 11% year-over-year. And we had a very strong performance in our storage bookings. So it was all in the server margin. But I have to tell you, because of the demand we saw, it reinforced that our strategy is right. We just need to execute better on a couple of things and return to that normal operating profit, which we are committed to do in the second half. And then what we guided was inclusive of that and the net impact of tariffs, because now it's available.
Go there on tariffs, Antonio. How much of a pain to the bottom line are tariffs going to be? Do you have a clear guidance of number?
Yes, we did, Caroline. We guided that it would be 7 pennies net of the mitigation impacts that we have now put in place and will continue to execute throughout fiscal year 2025.
And what worst case scenario do you build in there, though, Antonio? Because at the moment, every day we get a different tariff headline.
Well, we decided to go all in based on the 25% tariff in Mexico, the 25% tariffs in Canada, which we don't produce in Canada today, and the incremental 10%, meaning the 20% on China. So we factor all that in, and obviously we have a mitigation strategy from a global supply chain and also the pricing. So we decided to put it all in at this point in time, and if some of that doesn't get done, then we'll obviously get the benefit of it. But right now, because kind of what happened here is that because we did not guide the full year, waiting for the Juniper deal to close at the end of Q1, we decided to put a flag pole out there for our investors so they have it all out there.
Can you give us an update there, Antonio, as where the Department of Justice's case stands?
Yes, of course. First of all, we are incredibly disappointed that DOJ decided to file a lawsuit to try to block the transaction. Their market analysis is completely flawed. They narrowed the market to one sliver of the market, called the wireless LAN, and they felt there would be only 3 vendors to play in the market. The reality, there are at least 8 vendors, and many of them have the exact same share as Juniper today. In addition, they don't consider that this is a great opportunity for the United States to strengthen our U.S. national security outside the country. So now the judge has been selected. The judge has established July 9th as the trial date, and we will defend this in court. So we expect to prevail because we have a very compelling case. And then therefore, we expect to close the transaction in 2025, obviously delayed from the original time.
We have about 30 seconds left, but are you prepared for the worst case scenario?
Meaning the deal doesn't close. We always have multiple options on the table. Our fiduciary duty together with my board is to drive the best return for our shareholders. We felt that the Juniper transaction is the best long-term return that will shift the portfolio and create more earnings and free cash flow, because we committed at least $450 million of synergies, and so that's where we're focused. However, there are different ways to create shareholder value, and all those options are on the table. But right now, we want to see this through.
Antonio Neri, HPE CEO, thanks so much for joining us today.